Welcome to Lighthouse Outlook, the podcast where we talk less about the markets and more about what matters to the people navigating them. From family offices to founders, we go beyond the numbers to unpack risk, legacy, and the human side of capital. Hosted by the team at MacNicol and Associates Asset Management.
Good morning, everyone. October 16th, MAM research meeting. Go Jays Go. Pretty good news on the elder care side of the house. So just a quick update on that. And then we'll dive into Real Vision's numbers for an update, charts of the week. And so we have a partnership with Karen. They're a mercantile bank here in Toronto. And thanks to Dave's foresight, they led us on a deal that ultimately resulted in the sale of IntegraCare, which is basically a home healthcare service. So there's sort of two prongs to their approach. One was the at-home, and then the other assets, which we are still involved in at this time, are more the actual facilities at 147 Elder Street. And so, yeah, this got sold off to a private equity firm in the States for a pretty good price. And, these more specialized healthcare services are doing pretty well. So I'll leave that there. So very great news. And Dave, thanks for the find here. Real Vision. So talking a lot about Rawl. This is more, just to be clear, a focus on Real Vision, the corp, not XPAM. And so what Real Vision told us is that for the year-to-date period ended September, revenues were up by 20% to 14.7. That was a balance, they say, of both recurring and non-recurring revenue streams. Their membership revenues rose 20% to 12 million bucks, which is pretty good. And then that non-recurring revenue stream up 130% to 2.5, a lower number, but kind of faster growth in the last little while. They also had some events and partnership activities, so that was kind of interesting. Really, it's that blue EBITDA line that you kind of want to draw your attention to. We obviously want that one going up and not anything but up. So it seems as though, thanks to some, I guess, reallocation of resources, the company is definitely back on track here in terms of that. The cost of goods sold increased in line with revenues. That was checking in at just under 5.5 million, and that's due to higher production and fulfillment costs. The year-to-date gross profit at 9.4 was an improvement of 13% year over year, and OPEX were well controlled at $5.7 million. That's mainly due to kind of changes or repositioning in headcount. They essentially had to say goodbye to some people and subbed out their roles on a consolidated basis to essentially consultants. And so you could see the staff costing decrease. I think it's a little bit more than 8%. So that might be either an old number or a typo. But like I said, they essentially reallocated it to contractor spending. And so your EBITDA up nicely, just under 40%. We certainly hope that continues. So that's the elder care sale. And Real Vision charts of the week was, I guess it was, I don't know, hard to say. He's definitely kind of looking at the stock market, being a little bit more mindful of valuations. The individual write-ups are a little bit they kind of meander both ways. So if you take a look at the charts, it's really hard not to notice the shellacking the market took. I think that was Friday. I forget what day it was, but all the way down to the 50-day moving average. And so you'll recall from past meetings, his own kind of proprietary in-house risk off indicator, which has a great name, RORO, is now actually, for the first time in a little bit, down into that weaker market zone. And he didn't really say much in the way of dip buying throughout the piece. He's sort of, I think, taking a more clear position on maybe just be prepared to head for the exits if the carnage gets worse, I think, is the sort of flavor of his write-up. And so here you can see the various markets, kind of rolling over from very high levels. So if you've been in the S&P for a couple of months now, you're still making money, but that was a bit of a shot, and it goes all the way across the top. So the QQQs, the Dow, the Russell, all giving back. Oil's getting beaten up pretty badly here. Gold, is essentially for the second or third week in a row, he's kind of saying he literally says this week, your guess is as good as mine. So kind of uncharted territory for and then US dollar index has come back a bit down there, and not really sure what that's being driven by. I didn't really have a chance to spend too much time on USD, so maybe someone else can chime in. And then yeah, so these are these charts that kind of give you a better look under the hood, and it's really those top left charts that you're seeing a lot of the action in. The advanced decline line rolling over, a percentage of stocks above the 50-day rolling over. And, at the bottom right, you'll notice the S&P 500 versus the 30-year is rolling over as well. For that matter, the QQQs versus the utilities are also kind of showing signs of maybe a preference, not a flight, but let's say a preference to quality. And you've seen a little bit of a spike up in the VIX. I mean, we've been at these levels in volatility several times before, so I don't think it's crazy, but it's there. And then these are the various support and resistance lines. He'd really, like that. Often describes it a very definitive bounce off of these levels would make him super confident. This is a really interesting chart. What he did here is he took the long term, the very wide window of the S&P 500, and then on this slide here on the right, he kind of focuses in on the very, very upper right side of this chart, where you can see it's still above this long-term trend line, albeit for a very brief period. And overall, he says this is by far the most important chart of the S&P, this long-term kind of line here, where as long as we can maintain a position above this green overhead line, things should be okay. And then once you cross down through that, you could get some more breaking down of the technicals. This is one we haven't talked about for quite a while. It's the KWE Chinese Internet Stock Index. And so what he says here is that this region around the upward sloping, not the horizontal wide bar, but the narrow upward sloping line, has been a pretty good entry point. So if you're looking at picking up some passive index exposure to Chinese internet stocks, potentially an opportunity here. Not really sure that's our cup of tea, but for what it's worth, looks like a decent entry point. And then this is the Sprott Physical Uranium Trust, which looks really great here. It looks like it's definitely moving along, and I know that this is something that our house is definitely aware of. Even more impressive is the movement in the underlying uranium stocks, which actually have had a good run here for the last maybe 1 or 2 quarters, let's say. So that's great. Just a blank slide here to make sure everyone's paying attention. And then given gold and silver, he's kind of stopped putting out official price targets for certainly for gold. He essentially has thrown in the towel and says, like, literally, your guess is as good as mine. And so, whether it's 5,000, 10,000, who knows? He in fact is so bullish on gold. Excuse me, no, that's wrong. He's so unable to provide a precise kind of forecast for gold that he actually this week, for the first time I noticed, removed the term. Like in previous weeks, he said, well, gold is really doing well, and then there'd be a comma and he would say, I would expect it to pull back a bit. Now he's kind of removed that, saying, I don't even know if that's going to happen. But you wonder with the run up in gold, I mean, there's bound to be some pullback at some point. Who knows? Okay, and that's it for myself. Pass it back to Ken and Dave and the rest of the team.
Just jump through the disclaimer. S&P 500. Obviously, we had a bit of a rocky end to last week. More volatility this week. Got the first pullback in basically 7 weeks, I think, dating back to the start of August, or a little longer than that, I guess now. So closer to 2.5 months. You can see here the support's about $7 lower. Obviously, this volatility is stemming from Trump and Xi, you can kind of you can kind of see just the rockiness of the market purely from the overbought, oversold, which was down to 45% this week, but it's the second lowest in the last 2 months. And last week, after the large pullback, that was the lowest in the last 2 and a bit months. Something to watch there if we get this continued depressed demand after really some historically elevated inflows and investor demand and global equities as a whole, but also the US equity market. Looking here in NASDAQ, 3 box decrease week over week, really obviously driven by the same thing. Found it interesting, just wanted to highlight it in the NASDAQ 100 on the AI trade, just because AI matters so much to the NASDAQ 100. OpenAI is reportedly spending about $3 for every dollar in revenue right now. So we'll see if the applications of AI in the short term, obviously in the long term, there are be many revenue avenues and channels, especially if things turn over or top out. Obviously, NASDAQ remains historically overvalued relative to global equities and historical averages. Overbought, oversold. Last week ended at about 16%. That's the lowest since April 25th. So kind of the lows of, or close to the lows of those, we'll call it the tariff tantrums back in April. Looking here, Dow, a 2 box decrease week over week, 7 box slide really started, I think, last Wednesday slowly, but accelerated obviously through Friday, and it has rebounded since. But it did create a sell signal for the first time since August. So something to watch there. There are some nice support lines for the Dow Jones in the short term. The price objective did reverse. So for the first time in what I can remember months, bearish price objective. And then the overbought, oversold 21% this week. Last week, it flipped to -3%. So the sentiment on equities really kind of changing here, just in the short term at least. So we'll have to see if this is sustained. Obviously, value saw the most selling pressure. TSX 60 was impacted about the same, but it kind of was due for a small pullback in terms of creating some support. I had mentioned that for weeks. Support lines were stretching out. You can see that really the only support line it has since the bottom that we had in April was this little one in August, just a 3 box pullback. Now it's created some short-term support, perhaps to make higher highs, create a third straight buy signal. Overbought, oversold still remains elevated compared to US equity markets. So you can still see there's inflows. Perhaps that's the safe haven assets within the TSX, those commodities, especially those precious metal miners, excuse me. So we'll have to watch that if that continues. The VIX here, obviously, we got a spike up in the VIX, highest since, I think, June at the high on Friday. Obviously, sparring from Trump and Xi, kind of blaming each other for trade discussion breakdowns. I mean, you kind of knew this was going to happen. It wasn't going to be all rosy between the two of them. They differ on almost everything fundamentally. From an economic standpoint, I just think a lot of Wall Street got really optimistic when there was a couple positive news pieces from the discussions between Scott Bessent and the Chinese officials over the summer. And now reality is setting in, and it might not be as, I guess we'll say, bullish in terms of the discussions as once thought. Bullish percentage charts, the S&P 500 pulled back again. You can see we've been sliding quite a long time despite markets making all-time highs recently. I mean, it peaked out in July when breadth was, I guess, the broadest, but now we've seen this pretty large pullback, and the market continues to rip along and be pulled along by the largest companies. Looking here, percent positive trends, kind of the similar story, pullbacks despite the underlying indices performing really well over the last while. These have been pulling back for over 7 weeks now. And they haven't reversed. So that just a couple charts just to explain the lack of breadth in this melts up. TSX, no changes, so I won't bore anyone with that. Just quickly looking at the asset class rankings, US Corps gained 5 buy signals this week and have gained 15 buy signals over the last 6 weeks. So a little bit of a change there. And then things like inflation protected debt, short duration US treasuries have obviously fallen pretty heavily in the last few months. And then within the commodities area, precious metals gained another 7 buy signals this week. And then you can kind of see it's just precious metals right now. And then the rest, obviously some industrial metals being driven by some critical metals, performed pretty well over the past few weeks. Saw a bit of a pullback yesterday, but really not a lot of strength within the commodities area as a whole right now, except for precious metals, excuse me. Annual percentage of 1% daily S&P 500 moves just means that 23% of the time this year, the S&P 500 moves by 1% or greater. Berkeley, the average is about 25%, 24%. Obviously, last year was less. Despite all the volatility at the start of this year, markets had chugged along with these consistent small gains, and now we're here where I think the S&P 500's up like 15%, 16%, something like that, 14%. Really with a lack of volatility, but we've obviously seen a bit of a spike over the last few days, so we'll have to see if that sustains. Looking here, Dorsey Wright just wrote up about the tech melt up that we've seen. This is the equal weight on the right, and then just the general Spider XLK fund. You can see the equal weight, actually. The technical setup looks a lot stronger. It has support lines. It's moved up a little slower in terms of on this point and figure chart. Fund score is a little lower, but the equal weight, obviously you're not as exposed to the mega cap tech companies like you would be with the overall tech sector fund or even a NASDAQ 100 fund. Now back to commodities. This is just a gold to silver ratio. Actually, I think I showed this chart last week. Anyways, I think I accidentally forgot to put in a new chart here. It just talks about silver when it's historically undervalued and when gold is historically undervalued. You can see where we are right now. So kind of let people make their own decisions. And then just looking at the silver trust, obviously one of the most liquid ways to trade silver. Scores at about 5.7 out of 6. We hold this in some smaller client accounts where we've kind of been diversifying some of our physical precious metal holdings through some other instruments, including a couple of these iShares products and then the Royal Canadian Mint as well. But silver's continued to break out. We could see a bit of a pullback here. We're close to all-time highs, really. At the $50 mark, I think, is the real breakout on these technical charts, because going back, I think 15 to 20 years, it's really topped out of that $50 mark and then pulled back every time silver's got to that level. So we'll have to follow that. On the gold side, this is just the central banks across the world, except for the US, and their reserve holdings as a percentage. You can see really the nice increase we've seen over the last 6 years, 7 years, we'll say, where the percentage has more than doubled up to about 23, 24%, I think, on this chart, to the highest point since the late 90s. So something really changing. A lot of global institutions, including central banks, flocking to safe havens. And then this is just last chart, Acon Group, just stock spotlight. We've been buying this throughout the year. It's done decent. It's been a bit of a rocky road for it. Obviously got that large dip back in March stemming from the Trump tariffs, but really rebounded well since. Obviously a construction and concessions company, but really it could be a small quasi corollary to the nuclear energy play. It's currently constructing some SMDs, and it's currently constructing the largest nuclear project in North America. Obviously, a little niche part of their business. That's something that could potentially serve investors with some upside, but we continue to like it. We like the value in terms of the multiples it trades at currently, and a nice little diversifier, industrial construction. And I think that's it for me.
Good stuff, Ken. Morning, everybody. Let's get going here. A few important items there. The weekly beacon that Ken Reed's written covers a lot of the financials, especially the U.S. financials. So pay attention to that. That'll come out tomorrow morning at 8 a.m. I'll come back to the playbook after Michael Coolbaugh didn't publish anything this week, so we'll just I'll go through the morning coffee, see if there's anything of interest here. And it's just literally hot off the shelf. So nothing there. VCE's been quiet for a long time. Wonder if they're getting their act together. Have to look at some charts on that. And just looking at the returns of the markets, I think good to look at on a year-to-date basis. And look at this venture exchange. Yeah, our small microcap manager, Joe, we got to talk about that. Because that number, he's not even coming close to. So he's stubbornly hanging on to his positions and letting the market pass him by. He'll remain nameless here. But then the TSX looks nice and strong, better than the US. We've been saying that for over a couple of years now, so we're being proven right. China, lots of things going on with China. We'll continue to deal with their nearby trading partners. Probably a safer way to play that. And looks like Germany's catching up to Italy there. Europe looks like everything's rosy, which it's really not. And then on the energy side, oil still continues to disappoint. Nat gas has some monthly strength, but still year to date not very good. And then gold and silver, we've talked about this forever. Our arms are getting quite a bit longer, patting ourselves on the back here. So looking good in the PM space. Even copper's trying to show some signs of life. I'll do Canada US dollar on the point and figures. Looks like Bitcoin's trading off a bit there, and I'll do the interest rates as well. And then finally, what do we have on the news? Yeah, this last quote here, Joe, goes back to that manager I was referring to. Yeah, I just saw this headline on Bloomberg. That's interesting. People just don't know how to use AI properly yet. Okay, India's going to stop buying Russian oil. Okay. Yeah, okay. Bunch of things there. And let's finish up. I'm going to be short today because of no Coolbaugh. So the Canada US dollar is slightly down to 71 cents from 72, but still has the same two targets. Nothing's changing. It's just trading in a very tight band there. The ICE US dollar spot index, nothing's changing there. Sort of status quo for the currencies that mainly affect us. Crude oil, yeah, still sort of finding a ground here, down 19% year to date. Nat gas also not looking very good, as are the producers not looking very strong. Not much there until that changes, but I think we're into a bottoming pattern. Copper, now that's changed week over week, $5 up to almost $6. So that's good for the global economy. Uranium flattening out. Gold, yeah, gold's got to be taking some kind of a timeout here, but the spot price still measures up a little bit higher to almost 4,300. Gold bugs index up big, whereas the Van Eck majors down. So those are mixed opinions there. And the juniors up big in gold, silver down a bit, and even the silver juniors down a bit. So silver might have just had its last run, and now it's going to take the producers time to catch up to that. Bitcoin still that high number of 226,000. Ethereum, now that's changed. That used to be over a double, and that's come back off. So something's changed in the Ethereum world. Solana, I've just started following or charting this with comparing to the other cryptos, and it doesn't look very strong either. Crypto index measures up, so mixed opinions there. Financials, as I say, Ken's written them up nicely in Canada. The BMO equal weighted banks measures up quite a bit, and they've had a good run. So they're ignoring the Canadian housing boom bust that's going on right now in the condo market. There's a large development in eastern Toronto, the old Cloverleaf Mall. Read this morning, they're trying to get 70% commitments, 70% deposits before they could break ground, and they got 10%. So nothing's happening there. So I don't know. Maybe the banks have this all figured out with all these mortgages and the housing situation, but Doesn't show up here, so maybe it's their wealth management departments that are carrying the numbers. Okay, finishing up on interest rates, and then I'll pass it over to Sean. So 2-year looks the same as the 5-year, same as the 10-year, although the 10 years come off a little bit already, and then the 30-year. So the whole curve looks the same as week over week, and just a steeper curve, which once again, that's good for the banks. So that's what maybe the market's really feeding off of, more interest rates and not worried about bad loans. I guess they could always find a way to extend them and find some other ways and move them into maybe 30-year commitments, which is, we've taken a bite out of the U.S. way of financing real estate, which that's going to take away from some of our Canadian safety that we've had in the past. That's it for me. So Sean, over to you.
All right, just getting set up here. So one thing I've been watching quite closely, reading more and more about how these zero data expiration options are influencing the market. So right now, the price of the triple Qs has moved below what's called the gamma flip, and this red zone is a zone of instability. So that means that if the price is falling, the guys that are hedging these large zero data expiration positions will chase the trend. So if we're moving down and we've got an inverted VIX the last I looked. So just watch, like, our down day, and when we see these curve inversions, what I've seen is like the impact was like on Friday. Friday we saw, we entered into this negative gamma, and then the VIX curve inverted, and then literally all hell broke loose. And we certainly saw that in crypto, and I'm going to touch on that. All right, so my portfolio took a pretty good hit, as you can imagine. Over the last week, I'm down about 8%, still up over 20% year to date. So down almost 9% in a week. I'm levered long to crypto, that's for sure. Okay, economics, what I've heard from Besant is they're willing to run inflation hot, right? And the Fed, Powell has essentially said the same thing at his last speech. He's got his eyes on unemployment. We're watching aggregated data from the States and the ADP reports. ADP, like I said in the last report, they say employment is slowing, but not contracting. One private source of data is the Johnson Red Book. And they're saying we're up 5.9% versus a year ago. That's pretty good when you look at the index being averaging 3.7% for 20 years. So the economy is doing okay with something. Anecdotal reports are like more young people are living at home. They're not paying rent or paying a mortgage, and they're spending more on discretionary than anyone ever would have thought. So I thought that was quite interesting. The US dollar, everyone's expecting continued weakness. That's good for gold. People and this is the thing with gold, right? The amount of money that can address that market is immense. It's just absolutely immense, probably second only to T-bills. You've got sovereign wealth funds, governments, central banks, largest family offices in the world, down to a housewife in India buying a gold bracelet. There's really nothing like the amount of money that can address that single market. Can it go higher? Yes. Can it become ridiculous? Yes. So again, we look at the plays, GLD, GDXJ, the juniors, we've got 1911 gold down quite a bit on a week over week basis as of yesterday, but it's also up 5 times in 6 weeks, right? Like 5 times in 6 weeks. My value picks, Equinox and VLGs, had a really good week. The asset classes, again, US dollar down. I start with what's big, gold up, right? Gold up 6%, right? The S&P's down. You've got bonds up a little bit, bonds and gold going up, trouble ahead. We'll talk about Bitcoin and Ether. They just got crushed on Friday. I'll explain why. Oil's weak. Forward demand is weak. The report I saw this morning on Bloomberg was there's going to be a surplus of 4 million barrels a day. Okay, we've literally got to start thinking about when is Cushing going to get full? We could see something ridiculous in a narrow market like we did a few years ago where WTI goes negative. if you're going to be in oil, you better find deep value. You want to find somebody who's got cash flow that's growing. I would look at smaller companies. You know, the big guys are enamored with Aker out of Norway, probably the most technologically advanced oil company in the world, and just playing on that in a big way. Rates, expecting much lower rates and a much steeper curve. Like I think Fed funds will be 1.5% next year. I'm kind of thinking that the 10-year gets anchored at 4%. Right? Crypto. Okay, last Friday was horrible. And this is why. These pretty much unregulated exchanges, BitMEX, Binance, and the like, they allow these things called perpetual futures. So it's a cash secured future through a stable coin or Bitcoin, where you have to say, okay, I'm going to post $1,000 and I'm going to get long Bitcoin at 50-to-1 leverage. And the contract is auto liquidating. So if it falls, you know, to within 10% of your cost, you just get noticed like you're about to be auto liquidated. If you don't do anything, you get liquidated, right? It's actually a brilliant way for exchanges to protect themselves. They literally can't lose money unless it's an operational error. There's no margin call. And so you get all of these little people leveraging when the trend is up 10, 20, 50, even some of them used to do 100-to-1 leverage. And when they get liquidated, it's a cascade, right? And you can have big divergences between different exchanges. So what we saw was a massive liquidation, and we saw the two biggest market makers who support altcoins in their fictitious volume, a company called GSR, another company called Wintermute. They basically just pulled their liquidity. I will bet that Wintermute made easily $1 billion on Friday, right? Like they see this coming faster than anyone else. They know they control the order book. They manufacture the volume, and they can just say, okay, pull the liquidity or position, pull the liquidity. We're going to fill 20, 40, 80% below the last bid. So some tokens in the altcoin space essentially went to zero on Friday, because these guys pulled their liquidity. And this, again, illustrates to me. There's Bitcoin. I like it. I understand it. There's Ether. I think Ether's okay. I understand it. It's not easy to understand. But I think that it is getting built on, and people are adopting it on Wall Street for the time being. Everything else is a small business that is a promote. Best way to follow the altcoin space that you guys are interested in is the CoinDesk 80 index, from what I've seen. And this is a 1-week view. It's available for free on the CoinDesk website under prices. And most altcoins are still weak after, you know, like they're down 20% from where they were on Thursday of last week. This is like pretty scary, right? SWE, we've talked about this. You know, we know somebody that's using it as a treasury asset that got cut in half in literally a couple of hours. Like, there's just this is tough. And can it happen again? A lot of the leverage has been wiped out, so that's good. But given what's going on with the dollar and everything, I don't know. This can pump again, but I think the altcoins, having had a rough year, are going to have a difficult time recovering. I don't know where this banana zone that Raoul Paul talks about is going to come back. So here we see the VIX curve. This is what it was earlier this morning. It wasn't inverted, but it was pretty flat. And you have the spot rate, the dashed green line, just below the front month futures contract. This is getting a little worrisome, right? We could see the inversion. This was the view of the triple Q gamma position in the morning. So, you know, it moved up to the last price. It came down. I just bought like a zero DTE option during this call. I'm just going to tell you what it was to be transparent. So I bought the triple Q October 16th 600 put at 76 cents. It's now at 89 cents. So I've been working on this strategy for a little bit over a week. Last Friday was just an unbelievable day. You know, I had some options that went up 28 times. It's insane, right? I haven't pieced all the pieces together, but I'm willing to lose a little bit every day when we're in this position. I'm going to get this, you know, more and more right. But the moves that have happened intraday can just absolutely be astounding. Like I bought something for 2 cents and it went to $1. I sold it at about 80 cents. So the exit strategy to me is like incredibly important. And I'm working on that. So it's like you buy it, you liquidate it when you make 50%, you liquidate more when you're up 100%, and then you let the rest ride with like a trailing stop. So I'm working on that. But anyway, some of the equities I've mentioned over the past while, like Hack, didn't do great. It's trading with the average, but the one I own, the Van Eck Nuclear, really popped. And to what you guys were saying with uranium, the demand for power in the US is going to be beyond belief. I sold Intel. I think there's better plays. I still like Brookfield Wealth, MDA I like. So here's my play of the day, Carvana. It fell from 300 to 5. In 2023, it's gone from 5 to 338. Father and son in management. I've seen this before in cable companies. It's something like it's a bit of a red flag for me. And now I'm seeing industry experts questioning their business model and margins, mainly their margins. So like, look at this, guys. It went from like 300 and change down to $5 in a year. They built up a bunch of debt. When they got into trouble, they had to swap the debt for equity, and they killed the equity. And then somehow they said, okay, we're going to redo this again, guys. Just trust us on this one. And they've built it right back up. It's just insane. And at the bottom here is like my multi-leg heat map, right? We're starting to see some red show up. We haven't gotten like a big sell cross yet, but this is debt-fueled growth. And debt is a contract. And when you start missing contracts, there's legal ramifications. And I think that's going to happen again. Are they overvalued? They sell used cars. PE of 90, price to sales of 5.7, and a profit margin of 1.5%. I frankly don't care how much growth you have. The beta is 3.5, right? When this thing goes, it's going to go hard. CarMax is an extremely well-run company. Very conservative, very well-run. And they're down on a year. Okay, they are more bricks and mortar, but they're moving into the online space. CarMax had a late September earnings call, and they said, like, we're seeing weakness, consumer sentiment's getting strained. Wall Street Journal on October 10th, Americans are falling behind on their car payments, right? It's going from the bottom up. Carvana has a call on October 29th. I'm already short. I already have puts. Something to think about. These are the themes that I'm watching. Crypto, the debasement trade, gold, the world's alternative to the US dollar, nuclear, AI, everyone's talking, like the demand for data centers is like just unbelievable. But this is what, a software change can literally change the whole game. Remember what happened when DeepSeek came out? They're like, oh, the Chinese spent like $10 million distilling a frontier level model. And we spent $2 billion, or like maybe even more, $8 billion building that model. And then the Chinese replicate it and they give it away for free. If there's another advancement where they can distill GPT-5, Gemini 3.5, Claude, if they distill this and make it more efficient and then give it away, open source all the weights, everyone is going to really start questioning, like, should we be spending $1 trillion building data centers and training these models when we've already aggregated all digital information that's available into these models? Anyway, something to watch, because just remember how quickly the narrative changed when DeepSeek came out in February. Digital health and peptide therapy in the US and other countries is just rocketing ahead, right? They're at like a 7th level of past Ozempic in using peptide combinations for people to gain muscle, lose weight. Eventually it's going to come to Canada and it's going to be ubiquitous. I'm getting interested in motors. Take a look at this company called Donut Labs. The torque per kilogram that they're achieving in these brand new motors is off the charts. And they do everything from drones to semi-trucks. You're going to see lighter, faster, more efficient electric cars. South Korea just came out with a copperless motor, if you can imagine that.
Good stuff, Sean. Thanks. Chris Curry, and see you sent something to me. Do you want me to put that on the screen?
Sure. Thanks, Dave. And it's not the right meeting to bring this up because I'm not getting a sense of that there's a lot of negativity out there from this group on the economy, but there certainly is. I mean, every time the market goes down 2 or 3%, people say, oh, that's the turn, and it's rolling over. And consumer's deadly weak. But, the Atlanta GDP now estimates are approaching 4%. And I think a lot of that, when you think about it, structurally in the US, you've got the Trump part of the big triple B bill was the Trump tax cuts on corporations. And that's fueling a lot of the capital spending and the increased depreciation. So, and you're seeing that in the bank earnings. Like some of the banks are, the banks are all strong, lots of great loan growth made from corporates, not big increases in loan losses. So, despite the lack of data, the economy, forecasts for the economy are in the US, I shouldn't say, can't say the same for Canada, are still, super strong. Relating back to fixed income, I think fixed income investors are going with the Stephen Mirren riding that horse that he's going to drive Fed funds down to zero on Trump's behalf. Which is going to even, obviously steepen the curve even more. The US 10-year is probably the bond to watch, and it's been bouncing around 4% for most of the summer. And I tell you, when it dips below even like 1/32 is how the treasuries are measured. If it dips below by 1/32, it's like all over the news wires, 10 years below 4%, 10 years. So that, I think in bond world, we're going to watch the 10-year, and it's tracking to 4%. I guess just one thing I'd love to see from Sean, maybe not on a weekly basis, but maybe occasionally basis. I'd love to hear how these Trump coins are doing. Like he's pumped a lot of that stuff out into the market, and
that's a complete embezzlement.
It'd be great to see how that's doing, just from a interest point of view. But I'll maybe pass it back to Sean on that, or
it's just an embezzlement. Yeah, it's an embezzlement. The family is like embezzling constantly. There was somebody opened up an $80 million short half an hour in an account half an hour before he announced the China tariff thing on Friday, and they made apparently about $300 million off of that short, and then they closed the account and moved the coins. There are people that are literally suspecting that it's Barron Trump that did that, because it was just on like a very weird exchange called Hyperliquid. It's like just too coincidental. So like the whole family thing it's a massive embezzlement. We'll see what happens long term with it. But yeah, like,
is there no way to track that though, Sean? Like I thought, the whole basis of Ethereum is so you can track things. These altcoins, are they just untraceable?
So when you create a wallet address, that is your unique identifier, right? In Canada, you create a bank account, that's a unique identifier, but it's linked to your identity. The thing that's different in crypto is that it is pseudonymous. So you don't have to give your name, except when you're setting up an exchange account, but then people use corporations. But your wallet is what people track, right? Not your name. There are experts that could get back to names, but right now it's just at the wallet. And that activity was widely spotted by people that follow this in real time. And we'll see. But like the timing of that, the opening, the funding, the amount of the funding, that position, and then the quick closure and transfer of those funds is super suspicious. And if the FBI and if somebody is not tracking that, then it is because they've been told not to track that, because it's just insane, right?
You think the Democrats would be all over this?
Yeah, either that or like Nancy Pelosi is trying to copy it.
Right. Or they want to keep their insider trading ability forever.
Yeah, like
that bill goes away.
Yeah. Anyway, like this, my main S&P signal is gone to almost a full sell. I'm watching this closely. Like guys, we've had it so good for the last couple of years. That's why I keep exploring these put trades, is because how much higher is the broad market going to go? I think it can go 5 or 10% higher, but I know one thing is that the United States needs these magnets from China. The second headline from Canaccord that you reported was that Bessent is already talking back what Trump has committed to. Elon Musk has said, if we don't get these magnets from China, we do not produce robots. The auto industry has said, if we do not get magnets from China, we will be shutting down lines. It's going to be, it's going to be Trump always chickens out. He's going to have to. The China literally has the US over a barrel on this one. Anyway.
Yeah.
So I expect them to chicken out, and I expect the market to rally on that. But yeah, I'm just taking down risk. Like I said in last week, it's in the deck. Like I'm taking down my Bitcoin, and that was on Wednesday of last week. And thank God I took some off. I just see more downside skew out of what's coming despite these strong earnings, right? And it's going to happen from the bottom up. One of the names that I mentioned last week was Polaris Industries. I benefited a huge amount from that on Friday. Went down 10%. I set my trailing stop. It got hit. And then they announced great earnings, 13% yesterday, because they're spinning off one of their Indian motorcycle companies. So there I was lucky, more than good. But the consumer on these discretionary items like motorhomes, Indian motorcycles, side-by-side ATVs, that's where we got to watch, because when that stuff turns off, subprime car payments, that's when that'll be a sign that, the unemployment is ticking up, and we got to pay attention, because the recession is what will take earnings down 30-40% and probably take some of this market down 50%. Maybe not all of it, like not utilities, not healthcare and stuff, but we will have the opportunity with options trades, like a spread trade to the downside, to make 3 to 5 times the money on, let's say, 5% of the asset base. We're not there yet, but in my mind, like if you look back at 2008, if you look back at 2000, if everything lines up and you do a couple, put spread trades with a very conservative amount of money, like 1, 2, 3% of your asset base, and you make, let's say, 2 to 4 times on, say, 2 of them over the course of 6 months. The power of that is pretty compelling. And for an asset manager, what I saw at GMP Investment Management is when we went to cash in the financial crisis, so that we were down half of what most other hedge funds in Canada were, the money frigging poured in after April of 2009. Like it poured in. We went from being like 80 million to $800 million in like less than 18 months. So that was an important lesson for me. And one I'm keeping my eyes peeled for, because we're only going to get a 2 or 3 of those opportunities per decade.
Thanks for listening to Lighthouse Outlook. If this conversation sparked a new perspective, share it with someone who thinks differently. Subscribe for fresh episodes every 2 weeks, and visit MacNicolAsset.com to learn more.